Okay, this is a report by the National Gas Supply Association, 2023 Summer Outlook. All right, up arrow, upward market pressure, flat, down arrow, downward market pressure. Let's get into it. So things that can affect uh, natural gas prices include supply and demand, right? Production, weather, it's a big one. The economy, um, yeah, economy. Because natural gas is used to make a lot of finished good things that we tend to use day to day, which coincides with demand, and then storage. A build was going to put downward pressure on natural gas prices. All right, so the supply is projected to increase 3% over last year. You can see the build is for 101.3 billion cubic feet per day versus 98.1 last year. And this is roughly 10 billion cubic feet per day over the last 3 year summer average. So that's bearish for natural gas prices. We can see that in early or mid 2020, when the rig count dropped to its lowest in at least over this time span. Since then, the rig count has been going up, meaning more rigs online means more supply of natural gas to the markets. Now we can see the rig count has plateaued and decreasing a little bit to compensate for the lack of demand for natural gas, not only domestically but internationally as well. All right, let's talk about the summer weather. And we can see last year we had 1,372 cooling degree days. This summer we are anticipated to have roughly 100 less cooling days, so that's bullish for natural gas. We can see that last year uh, the warmest days on record were in the Midwest to the uh, west. We can see for this year it's going to be again kind of like the mountain west area, but also we're going to have some hot days on the East Coast as well. We've seen so far this year uh, the West is getting a lot of rain, and the East has not been getting a lot of rain. All right, when it comes to demand, uh, the biggest thing that points out to me on this chart is the CPI, which has gone down by almost half. So last year around this time, the CPI was 7.9%. This summer, it's dropped down to 4.5%. And this is all due to inflation. And natural gas is a commodity, and so it trades inversely correlated to the US dollar. Um, but as inflation increases, that's going to put negative, that's going to dampen demand for everything. All right, so despite that, demand is projected to increase 3% higher this than last summer, and I think that's going to come due to um, the warmer weather or the 100 less cooling days. All right, power generation utilized by natural gas, and that's expected to, let's see, increase. Now, there was a report out there by Market Watch. It said that this year, this summer, will be the second largest demand for natural gas for power generation. So that's also bullish for natural gas prices. Now we're in this green movement, so getting power generation from Mother Nature will continue to increase, um, potentially putting less upward pressure on natural gas prices because there'll be less demand. Um, we'll see more solar panel farms coming online. Wind is big in Europe. Then obviously, as an example, you're going to have Tesla's battery storage segment, which could be bigger than the car segment in the years to come. And then coal, well, coal is very bad for the environment, so that makes sense that it continues to dwindle. All right, this is bullish for natural gas. You got 13 new projects coming online within the next couple of years. Petrochemical, fertilizer, steel. You need a lot of natural gas to make fertilizer. You need fertilizer to increase the yields on crops. You have 6 expansions. Again, all bullish for natural gas prices. But again, this is going to take a couple of years. All right, this is an interesting chart. So this is the global liquefied natural gas price chart. When Russia invaded Ukraine, when the Nord Stream line 2 went offline, the U.S. was sending natural gas over to Europe because there was just the demand far exceeded the supply. And that's why we saw this huge spike in prices. The Asian market, as an example, Japan, they import all their energy. So, but you can see since the peak of, say, the fall of last year, prices have collapsed. And we've seen that in the natural gas domestic prices as well. So it's bottomed and it's projected to move higher a little bit. But the U.S. natural gas, liquefied natural gas market will pretty much stay flat. All right. Now the debt ceiling that's going to be approved, there is language in there to kind of speed up the recovery, the permitting process for oil and natural gas projects. However, this chart is showing that at least in the Northeast Mid-Atlantic, there have been some projects that have been canceled or delayed. Bullish for natural gas prices. All right, let's talk about summer storage. So, for bulls out there, we're off to a bad start. We have roughly 500 billion cubic feet more natural gas stored versus last year. The average daily injection is increased a bit, and we're going to end the injection season with about the same as the starting point. All right, so somewhat in conclusion, summer supply is going to put some downward pressure on natural gas, the weather, downward pressure on natural gas prices, economy. It was more robust last year, less this year, putting pressure on natural gas prices. Customer demand is going to increase. Not sure from what. Summer storage down. So overall, relative to last summer, it's going to put downward pressure on natural gas prices. So, kind of in conclusion, summer production record setting, even with slowing rig count. Uh, Drilling rigs declining, but efficiencies boost production. Summer power burn and liquefied natural gas exports keeps demand strong. Yeah, relative to years ago, but not relative to last year. Power burn expected to hit record demand for natural gas despite milder summer. Industry demand slows minimally with slowing economic growth. And then you have the power sector fuel mix continues to evolve with more gas and renewables, less coal. All right, so let's just get into this article from the Natural Gas Intelligence. This more talks about weather, upcoming weather. So Memorial serves as the unofficial start of summer, but for natural gas demand standpoint, bulls spent the holiday waiting for the season to start. The absence of heat further prevented the market from building on the bullish momentum created by a surprisingly steep drop in natural gas directed drilling last month. So, rigs coming on and offline, there's going to be a lagging period before you see that eventually make its way into natural gas prices. Long range weather map maintains a rather hot U.S. pattern gain ground during the second half of June as highs of 90s increase. Okay, so second half of June, which I think I've mentioned in some of my natural gas analysis videos. NYMEX futures lost ground throughout the May 25th, 31st trading period, weighed down by the prospect of continued production strength and lackluster early June heat. Elevated production, subdued liquefied natural gas, and cooling demand reverting lower may enable the storage surplus to approach 400 billion cubic feet, above the 5-year norm. Long-term storage trajectory is sharply lower, and the medium to longer fundamental outlook points to upside price potential. Natural gas may have to muddle through a near-term short patch in the coming weeks. In the near-term forecast showing cooler than normal temperature blanketing the southern half of the 48 states. That's going to undermine the anticipated seasonal rise in power burns. Near-term cooling demand is expected to languish below 30-year norms through mid-June. All right, so it looks like we got to get through the middle of this month before we see the weather favor upward prices in natural gas. Now let's go to the charts. I'm just going to go straight to the daily chart. Now I'm going to take this daily bias level off. Again, I think in one of my reports, you can see the extended green range candle here on decent volume. Price hit the 100-day simple moving average. That was a top. And then the following week, we saw people who got in early, even down here, take profits. Price came down. And then we saw just the forecast and weather become cooler versus milder. And we did get a little reaction, but that was short-lived. So I'm going to take the daily bias level off the chart. Now we can see price did break below this seasonality price of $2.20. This was kind of marking the seasonal bottom. When we go to this is from equityclock.com. This is the natural gas futures seasonality chart over the last 20 years. And when we can see that from the peak in June to the trough of July, you have about a 7% decrease in price before prices start to steadily move higher. And then you have this steep incline in prices due to the cooler weather. Natural gas is used to heat homes. So when we go back to the chart, I was projecting that from the peak, a roughly 7% decline would get us to around 220. But since then, last week price did breach this level. Now I did talk about how we were going to end the week in the green, only because those who were short at the beginning of the week were going to take their profits. We did close green, but not by much. So what am I anticipating going into this week? Well, we could see more bearish pressure on price until we get to mid-June, when we anticipate having more 90-day degree weather. So we could see a retest of the $2 level. But as we know, the bulls have been supporting this level and protecting this level at $2. And so I would anticipate that remains to be the floor. I'll leave this on the chart for now. And if we do drop, what's going to coincide with a bottom, we should be in mid-June by then. So let's just mark this here. Let's see. So I'm projecting that prices move lower just due to a lack of demand and some bearish dynamic conditions affecting price. However, I do anticipate, if price gets down to $2, that $2 holding based on previous wicks to the bottom. Thanks for watching. Subscribe. Please like the video.